The team at Technology for Hotels knows how busy you are, so we've created this concise briefing to keep you up to date on key happenings in the hotel industry. Let's dive in.
Welcome. Yeah, this week we're really focusing on strategic positioning. It's all about where the smart money's flowing.
Okay.
So think significant capital spend, strategic brand moves in APAC, those crucial regional tourism shifts, and importantly, finding those essential quick wins in hotel tech, cutting through the AI hype.
Right, there's a lot of that around.
Exactly. So we're synthesizing the key developments across Australia, Japan, and, well, the wider region for you.
Great. Let's kick off with those capital commitments then. Because the scale is, well, pretty stunning, but the strategy seems to vary quite a bit.
It does. You see sort of two distinct trends, I think.
Okay, what's the first one?
Patient, ultra-luxury revitalization. That's the first. Think Sandhill Road's Waterside Hotel in Melbourne. It's finally nearing completion in November 2025.
Wow, 8 years in the making, wasn't it? Transforming that old 1925 heritage pub on Flinders and King.
That's right. 8 years. It's a real masterclass in patient capital. And the strategy is clear, keep the iconic facade, but completely transform the inside. Rooftop cocktail bar, garden terraces, that big 3-level Southeast Asian place, Passport.
So maximizing venue diversification and high-yield F&B.
Precisely. It's a template, really. Successful CBD heritage transformation through, well, sustained patient investment.
And speaking of those high-end patient beds, Japan's seeing some major moves, too.
Definitely. IHG's strategically expanding its ultra-luxury Regent brand. Their first resort property there, Regent Karuizawa, that's opening 2028.
Right. And we should also mention, just quickly, the Park Hyatt Tokyo. That's reopening December 9th, 2025, after its big renovation since May 2024. New rooms, upgraded dining, Girandole by Alain Ducasse, too.
Yeah, that's a key update. And the Regent move, shifting focus from the city Regent Kyoto to Karuizawa, that 58-key onsen retreat designed by Kengo Kuma.
Surrounded by forests, hot springs. Lovely.
It's strategic portfolio balancing for IHG. It diversifies their risk, doesn't it? Captures both the prime business traveler and that ultra-premium leisure and wellness market.
Makes sense. Long-term plays on Japan's enduring luxury demand.
Exactly.
Okay, let's pivot now, quite sharply actually, to the second trend you mentioned. Pure infrastructure betting, but outside the capital cities.
Yes. Novotel Geelong is a prime example, getting a huge $75 million, 11-story expansion.
That's the largest hotel development in Geelong's history, I read.
It is, and the scale is the real story. They're adding 134 guest rooms, including 15 apartment-style suites. That brings it up to 243 rooms total by 2027.
So it's not just growth, it's repositioning.
Absolutely. Positioning Geelong as a flagship waterfront spot capable of handling major corporate business large-scale events. It's an aggressive bet on reaching critical mass where before it was, well, mostly limited service options.
And then further north, looking ahead to the 2032 Olympics, Moreton Bay is back in that big $180 million 5-star tourism and dining precinct in North Lakes.
Very ambitious. 130 luxury rooms aiming for that mini James Street vibe.
The timing is interesting, though, isn't it? So far out from 2032.
Well, that's the calculated risk assessment, right? Developers are aggressively locking in construction costs now. Labor, materials, supply chain certainty, trying to avoid the inevitable cost blowouts and chaos closer to the games.
Right.
They're betting on massive long-term regional returns. I mean, they expect a $538 million injection into the local economy from this.
Okay. Let's talk brands now. That growing lifestyle niche, Drifter. The design-led hotel-hostel hybrid they've launched in Australia now.
They have Drifter Byron Bay and the smaller Little Drifter in Glebe, Sydney.
What makes them compelling?
It's that blend, I think. The social energy, communal kitchens, rooftop pool, DJ booth.
Right.
But with genuine boutique hotel quality.
Yeah.
And they've got rapid expansion plans already for 2026, Melbourne, Wellington, Auckland.
The challenge there must be scaling that social energy model efficiently, especially with high labor costs, without losing the boutique feel.
That's the core question. Success hinges on automating the back end, freeing up staff to really focus on curating that high-touch guest experience they promise.
Makes sense. And just quickly wrapping up some other key developments, Jerry Schwartz bought the White Bay Brewing assets.
Yeah, rebranding the Roselle venue as Sydney Brewery Roselle. And First Group got the green light for a 49-room boutique hotel down in Mingar Gorge, Wilton. construction starting late 2027.
Okay.
And luxury updates.
Capella Lodge on Lord Howe Island reopened, that beautiful
Yeah.
9-suite property, refurbished the Gowers Terrace, added new e-bikes,
Yeah.
and new lodge managers too, Brody Bush and Ryan Ward.
Good for them. All right, let's follow the money trail. Acquisitions, APAC market health. What are we seeing?
Well, targeted acquisitions,
So-
like Siam Wellness Group picking up the 53-key Sunset Park Resort and Spa in Pattaya. Good location near attractions, the airport.
Strategic buy.
Exactly. And then you've got Global Asset Solutions strengthening its APAC presence, new Singapore office to manage that high-profile KS Hotels and Resorts portfolio. That includes some big names, right? Park Hyatt Melbourne, JW Marriott Gold Coast.
It does, and what that signals is institutional capital is ready to deploy, but it demands that centralized regional oversight.
Okay, so what's the overall market snapshot for APAC then?
It's looking strong. We're forecasting a 9% rise in air travel, that's revenue passenger kilometers, in 2025. That's actually the strongest growth globally.
Wow, 9%. That's huge.
Uh,
Can the infrastructure handle that? Or is this just feeding into places with limited supply, pushing ADRs even higher?
That's precisely the tension point, yeah. ADR growth is comfortably beating inflation because supply is still constrained. Occupancy, though, is still lagging behind historic highs,
So investors are.
aggressively hunting value-add assets, particularly in those liquid markets. Japan, Korea, Australia, Singapore. Investment volumes already hit $12.1 billion year-to-date through August 2025.
And likely to match last year's $16.3 billion total.
We fully expect it to, yes.
And this mix of liquidity and tight supply,
Yeah.
it's fueling that conversion trend, isn't it?
Absolutely. The acceleration of hotels being converted to other uses, student housing, co-living, that's a critical supply factor we need to watch.
Co-living specifically seems interesting.
It is. It's a high-yield conversion path. It targets young professionals who'll trade maybe a bit of private space for high-quality, branded communal amenities. It puts direct pressure on mid-market hotel supply in key cities, plus offers more stability than transient stays.
Okay, let's shift focus slightly. Long-term strategy. Branded residences that seems to be gaining massive traction in Australia now.
Oh, definitely. The sector's emerging really strongly here. It mirrors the global trend where, 80 to 83% of these ultra high net worth residences are now hotel branded.
And the appeal for buyers.
It's clear. H&W buyers looking for luxury apartments, often $15 million, plus they want the premium amenities, the maintenance, the design integrity that a major hotel brand guarantees.
Like Mondrian residences on the Gold Coast, or One Hotel Seafarers in Melbourne, leveraging the hotel brand to cut risk and boost sale value.
Exactly. And developers are timing these too, many aiming for completion before Brisbane 2032. Linking residential luxury with hotel brand credibility is key to attracting global wealth and ensuring immediate project recognition.
Makes sense. Okay, strategic alliances. Choice Hotels Asia Pacific has partnered with the NBL and NBL1. Beyond just visibility, what's the tangible value for franchisees?
It's about guaranteed volume and community engagement, really. Through their Trace Sports Travel program, registered clubs and teams get discounted rates and rebates.
So predictable, high-volume bookings.
Right, especially during shoulder and off-peak times, tapping into that grassroots sports travel market. It's a smart way to fill rooms, support the community, using a national sports body to stabilize local occupancy. Very clever.
And up in the Northern Territory, we're seeing structural integration. Tourism, NT, and NT Major Events Company are merging.
Yes, effective January 1st, 2026, they become Tourism and Events NT.
The goal being
Integrated marketing, driving year-round visitor growth. So instead of selling event tickets or hotel rooms separately, they'll focus on bundling them. Major event tickets with accommodation, tours.
encouraging longer stays.
Exactly. Combating those short, single-purpose trips and promoting richer visitor experiences. A more holistic approach.
Okay, essential topic, tech, specifically AI in hotels. Loads of hype, as we said, but the tools still need refining, don't they?
They do, and hoteliers face that dilemma. Do you wait for the perfect seamless solution or start implementing incremental wins now?
What's the smarter path, in your view?
Well, I'd argue not waiting. Taking that conservative approach carries a pretty high opportunity cost. You risk slower labor efficiency gains, reduced margins, missing out on immediate revenue bumps.
So focus on the quick wins.
Yes. Focus on incremental improvements that can realistically break even within, say, 2 years. Don't wait for the mythical perfect system overhaul that might never arrive or might be obsolete when it does.
Let's get specific then. Predictive maintenance. How's that a quick win with a clear ROI?
Oh, textbook quick win. Instead of reactive maintenance, costly last-minute fixes, rooms out of service.
The worst.
Exactly. AI analyses sensor data to predict component failure before it happens. The ROI is immediate. Maximum room uptime, fewer guest complaints, less money spent on emergency repairs. Low investment, high impact on the bottom line, daily.
Okay. What other quick wins can leaders implement relatively easily?
Think automation efficiency. Automated housekeeping schedules based on real-time checkouts, predicted occupancy, smart procurement and reordering systems to cut inventory costs and waste.
And guest-facing.
Use those chatbots and virtual assistants for the level 1 queries, free up your staff. But honestly, the highest value application right now, AI-driven dynamic pricing and personalization tools, that's where you directly optimize high-margin revenue.
But the big hurdle everyone talks about is the fragmented tech stack, siloed data.
Precisely. That's the main challenge. The data needs to flow. While you might be planning a big system upgrade down the line, the immediate need is for bridge solutions.
Like middleware.
Middleware, or robotic process automation RPA. Something to stitch together the existing systems and bridge those data gaps. And remember, the real payoff isn't just cost savings.
It's freeing up staff time.
Exactly. Reallocating that valuable human time away from boring transactional tasks towards creating genuinely high-value, human-centric guest experiences. That's the ultimate goal.
Great insights. Okay, finally, let's quickly run through the essential personnel updates in our Stars in Motion segment.
Lots of movement.
Indeed. We welcome Will Duncan as multi-site GM at Iris Capital. Rebecca Griffiths is the new Director of Digital at Drifter, and Will Howes takes on VP Sales APAC for Trust You.
And a shout out also to Nathan Telfer, the new Director of Sales and Marketing at Pullman & Mercure Melbourne, Albert Park. Hani Dahar steps in as VP Operations at Millennium Hotels and Resorts New Zealand. And congratulations to Christy Phillips, the new Chief Executive of Hospitality New Zealand.
Also, we know Matthew Richardson is the new Regional Manager at YHA Australia. Ragab Khattab is now General Manager at Swiss Blue Hotels, and Kyung Pang takes the GM role at the Mercure Kakadu Crocodile Hotel.
Quite the list. Lots happening.
Definitely. That wraps up this week's 5-Star Weekly Briefing. Thanks for tuning in and staying informed with the latest in the hotel industry.
Thanks, everyone.
Don't forget to check out our 5-Star Conversations podcast, where Brendan Granger from Technology for Hotels sits down with the industry's most influential leaders to uncover their journeys, insights, and the future of hospitality. It's a must-listen for anyone passionate about elevating their guest experience and driving innovation in the hotel world.
A great listen.
Until next time, stay well and stay ahead. See you next week.